Which stock should you be watching for 2025? Now, if you go back and take a look how 2024 was for the stock market, it was a phenomenal year. Like the S&P 500 alone has grown by over 27%. And when something like that happens, you know that there are a lot of stocks that grown by a few hundred percentage, and probably some of them by thousands of percentages. And the people who actually made money aren't the people who invested in the S&P 500 or any other stock out there in the last week or so, but rather they invested when a lot of people were afraid to invest. That's why when they say that, invest when everybody is afraid to invest and sell when everybody is buying. So those people who took advantage out of 2024 are the people who invested in 2022 and even in 2023. And when the market started growing in 2024, they reaped the rewards. I mean, go back and remember what was happening in 2022 when the Fed raised the rates. Everything was collapsing. 2023, everybody was thinking that a recession might happen because the rates were so high in the first place. But now, 2024 was a phenomenal year. And that's why I want to talk about the stocks that could do very well in the next year because of the signs that we have today. I mean, some of the best examples, like some of the best opportunities is probably Palantir, the company that has grown by almost 300%. I mean, I really envy the people who actually purchased the stock at $20 and now it's worth $70. And moving forward to the next year, it will probably do a much better job. Now, there are a few industries that will actually grow substantially over the next year or probably even over the next couple of years due to a few reasons. And one of them is certainly artificial intelligence. So if you're investing in the market, this is what you should be looking into. This is the industry that you should take a look. Which are the companies that could take advantage out of AI? Because if you take a look at the statistics right now, there is going to be a $235 billion spending in AI. Now, all of that money is going to go to certain companies. And if you kind of give it a general look, you'll find out that it's not going to go to everybody. It's not the market is not equal because technology, power, and money is centralized in the hands of a few companies. And these are the companies who will reap the rewards of this $235 billion. And it happens in every industry. Like, take a look at athletes. Like, there is 1% of athletes, not 1%, 0.1% of athletes make 99% of all the money that is made in sports. Like 1% of businesses reap the rewards of 99% of all the money that is generated in that particular industry. And it happens everywhere. But if you kind of give it a general look over the next 5 years, $850 billion will be invested because this is the fastest growing or one of the fastest growing industries. So when you think of Apple, Amazon, Google, all of them are spending billions of dollars in order to compete in AI. Think about the last Apple event. It was all about Apple Intelligence. Think about what is Google doing. They're trying to compete with ChatGPT. They're also trying to invest billions of dollars in creating their own hardware. Think about Amazon that wants to be a direct competitor of NVIDIA and a direct competitor of ChatGPT. Like, everybody is just like, listen, this is a new industry. This is going to take over the world because think of any industry, think of any job. AI is going to replace it to a certain extent. Some industries by 50%, some of them by 80, some of them by 90. This revolution is as big as the revolution that happened back during the dot-com bubble. Because I have, for example, an accounting and finance background. So I do understand in accounting, and that's because part of my job since when analyzing companies. And if you actually take a look at what accountants do, you find out that AI, the most advanced AI today, can already replace at least 50% of what accountants do today. And within the next 2 or 3 years, as this growth is happening exponential, it will be able to easily replace probably up to 80-90% of all the accounting jobs. Think of law. Most of the law is about knowing how law works. So if you feed the generative AI enough information, it will give you faster, much accurate outcomes than a lawyer can do that spent 20 or 30 years being a professional lawyer. Think of the financial industry. Think about, any industry that comes into your mind. So because of these factors, I'm kind of certain that NVIDIA will keep growing. Now, to a certain extent, Nvidia is an overvalued stocks, and I'm not really a fan of investing of companies that are already trending in the market because investors have already reaped the rewards. But if you kind of give it a closer look, Nvidia has no competition. Like, take a look at the market. There is not a single serious competitor of Nvidia right now in the market. Like, there is nobody can literally stand behind, besides them in 2025. And if you look at the forecast, how much Nvidia is going to make within the next year, it is pretty much mind-blowing. In the last quarter alone, they made like $35 billion and net income of around $20 billion. But if you just go back and take a look at the numbers for 2024, they have made $60 billion. Now, their fiscal year starts from January. So the number that you see over here is from January 2023 to January 2024. So they made around $60 billion and $30 billion in net income. And now let's take this number and compare it to how much money these companies are going to make this year. And you kind of realize that for the fourth quarter alone, according to expectations, they are going to make $37 billion. Isn't that insane? So in a single quarter, they are going to make more than they made they're going to make half of what they made the entire last year. So the projected revenue for the company is around $129 billion for the fiscal year of 2024 to January 2025. So if the company has doubled its revenue within a single year, you shouldn't be surprised if their valuation has grown so substantially. But revenue isn't alone. The company could be making hundreds of billions of dollars. It's all about the net income. How much money is left for the business that is going to go to investors and different kind of projects. And if you kind of compare it, it's also shocking because their net income for this year is going to be $70 billion. So in a single year, they have grown their net income by over 100%. And that's why they have grown to over a $3 trillion business. At some point, they even were the most valuable company in the world, taking over Microsoft, taking over Apple. And next year, I'm kind of confident that Nvidia is going to be the most valuable company within the entire 2025 because their revenue is expected to grow to almost $200 billion. Well, this is not a 100% increase, but it's a substantial increase. It's like almost over 50% increase, and their net income will grow to $104 billion. And because of these numbers, investors are going to overpay for this company. Yes, to a certain extent, the business is overvalued. But if you're talking just within the frame of 2025, if there is not going to be any kind of major crash, so don't be surprised if Nvidia is going to cross $4 trillion or $4.5 trillion within the next year. But again, there could be a crash, there could be a correction, and Nvidia could lose some of its valuation. But if this AI boom is going to continue without any kind of unforeseen, let's say, incidents within the next year, that could happen. Now, another company I would take a look at is Amazon. Now, Amazon is probably one of the companies that can seriously compete with Nvidia because a lot of people, when they think of Amazon, they think of Amazon delivering their goods back to their door. That's exactly what you think of Amazon. But the main source of revenue, or not the revenue, the main source of net income for Amazon is not delivering goods, it's not shipping goods. It's about Amazon Web Services. So back in the days when Jeff Bezos started Amazon, they realized that they need to store all of that somewhere. I mean, when you think about internet, it's somewhere there in the cloud. But in reality, it should be stored in physical computers somewhere. So they created these huge databases and started kind of powering the entire Amazon within it. And then they realized that there is a huge demand for it in the market, and they started slowly renting all those databases to whatever company who wants to establish a website and rent some of their databases. And now they became the market leader. Not now, they've been the market leader for over 20 years. And that's what Nvidia does as well. But they're not providing the exact same service. They're providing their GPUs in order to train generative AI for companies. So it's not just about the chips that NVIDIA creates. It's about the databases. It's about the ecosystem that they built in order to make those chips within that ecosystem as efficient as possible. An ecosystem plays the most important role. It's like the number one reason that people go to NVIDIA and not any other company. Because right now, even AMD, even Apple can create as great chips as NVIDIA does. But because you have this great ecosystem for businesses, everybody just goes to NVIDIA. I mean, think, what is an ecosystem? Like if you're using, for example, an iPhone, it's not just a hardware. It is the software that is within it, the iOS. And then how do you download apps? You go to the App Store. So it's just one ecosystem that makes the entire process much more smoother and much more easier. And then you have, for example, your MacBook. And because it's one ecosystem, it's very easy to use AirDrop to send things between your devices. And then you get your AirPods, and then it connects much better within your MacBook and your iPhone. So that ecosystem makes the entire process much easier, that lets people to use Apple products in the first place. That's what NVIDIA does, but when it comes to actually powering generative AI for businesses. So because Amazon have a long experience is actually creating those databases, they can, if they can actually come up with those chips, they can replace or provide an alternative service to other companies besides NVIDIA and take a market share from them. So if you take a look at the numbers, you find out that Bezos, Amazon in general, have invested $2.6 billion in a company that creates similar chips than NVIDIA does. They are already creating pretty much the same equivalent chips. The only problem is that they still don't have that ecosystem. Yes, they still cannot manufacture them at a cheaper price than NVIDIA can, but in 2025, that is what Amazon wants to change. So if Amazon does that, I wouldn't be surprised if their stock actually grows substantially. Especially, if you take a look at the mindset or the mentality that Amazon works at, you will kind of be amazed, because Amazon doesn't care about net income, and people who invest in Amazon also don't care about the net income. If you take a look at the revenue, it's like $500 billion, probably like almost $600 billion. That's a lot. But in comparison to their net income, it's very slow. And that's how retail business usually works. You're selling a lot, but you're making a very tiny margins on the products that you sell. And the idea behind it is very simple, is that Amazon up until 2018 was not a profitable company. They were running at a loss. They would do everything possible in order to make sure that at the end of the year, they don't have extra money. Why? Because when you have net income, you have to pay taxes. And when you take that money, invest it somewhere, you increase your market share. And that's what Amazon wants to do. They still continue that mentality that Jeff Bezos had since the beginning. We're going to take all of that money, we're going to build those chips, we're going to build this ecosystem. We have already the databases, we have the infrastructure, we have the experience in building them. And within probably 2025, when investors suddenly see that Amazon is becoming a serious competitor of NVIDIA, there will be a lot of demand for that stock, which will lead the stock price to rise. And because of the signs that we have today, we can see probably that Amazon is going to have a great year simply due to the AI. Now, another stock I will pay attention, I also talked about it in previous video, is Google. Google is going through some serious crises. There is the Justice Department required to break up Google, and Google is certainly appealing that decision. And because of that, the stock is down. And if you look at its PE ratio, for example, it is around 23, which is much lower than other tech companies. If you take a look at the PE ratio of NVIDIA, it's like 50. If you take a look at PE ratio of Apple, it's more than 30, even though it is the largest tech company in the world. So because of these reasons, Google is actually experiencing a drop in their stock price. And even if you take a look at their numbers, for example, their net income for last year was like $73 billion. It's as much as NVIDIA. And yet, if you take a look at the valuation of NVIDIA, it's almost 50% higher than the valuation of Google. And Google is the company that is best positioned to take advantage out of AI. A lot of people use ChatGPT. Of course, ChatGPT overtook Google in a lot of things, but Google in a position to take over ChatGPT because Google is the gateway to the internet. And everybody goes to Google, they start searching in Google, and they use in the process Google's Gemini, which is an alternative to ChatGPT. And if you take a look within the next couple of years, suddenly people start using Google's AI much more than they use ChatGPT, and that's how Google plans to take over them. And also, Google announced that they are spending billions of dollars in order to create their own hardware. And they have that, I mean, they still don't have the entire infrastructure, but because of this AI boom and the position they have positioned themselves, because Google has been in AI for like what, 20 years or something like that? Maybe I'm a bit exaggerating, maybe it's like 10 or 15 years or close to that. Now, another company I would also pay attention to is AMD. If you take a look at the industry, you'll find out that NVIDIA is reaping the rewards of AI. And a lot of those huge companies don't really like that. They want to also be playing a role. They also want to they want to negotiate with NVIDIA about the prices that they're charging for their hardware, right? And they cannot, because NVIDIA is the only company that can provide that. Now, AMD, in terms of manufacturing chips, is not far away from NVIDIA, but AMD does not have that ecosystem that NVIDIA has. So starting from next year, I guess most likely some of those large companies will come to NVIDIA and they will invest in NVIDIA dozens of billions of dollars in order to help to build that ecosystem so that we have an alternative to NVIDIA in the market, and AMD might provide the exact same service. So either NVIDIA will lower down prices, or all their customers will just go to AMD for that. So that announcement of extra investment in AMD might drive the stock price higher and higher. Right now, the company is valued at around $230 billion. So if NVIDIA could go to like $4 trillion, I mean, there is a very good chance that if such investment will come to AMD, it can actually double its stock price within 2025. Now, that's still some kind of speculation, but it's something to watch on when it comes to NVIDIA. When it comes to AMD. Now, another industry or another sector I would pay a lot of attention to is certainly drill baby drill. And I'm talking about the energy industry. Now, drill baby drill is something that Donald Trump said during the campaign. His main promise was that I want to lower down prices by helping the oil manufacturing companies to drill as much oil as possible in order to lower down prices, because the price of oil affects everything. It's not just about the price of just the oil, because everything is being shipped from one place to another. If you can actually bring down oil prices, you can actually lower down prices of everything. And if that way you can bring down inflation, you can charge tariffs on foreign goods. That is one of his mentalities and ways in order to fix this problem. And that is why he wants to deregulate the entire industry and lets the United States pump as much oil as possible. United States is already pumping more oil than it ever does. For example, if you just go back to 2007 and 8, it was around 400. It was less than that. It was like 300. Now it's over 800. And if Trump actually keeps its promise, I don't think it will rise substantially, but there is still some room to grow. And one of the companies that will benefit from that is ExxonMobil. Now, ExxonMobil is not really a company that has huge future, because we are running out of oil and the world probably 50 years from now will look completely different. If we have made such a huge progress over the last 20 years to move to renewable energy, I mean, over the next 20 to 50 years, renewable energy will be the main source. And that is why now is the time to actually drill all of that oil. ExxonMobil might be slightly overvalued because its PE ratio is around 14 to 15. But given the fact that even at this price stock, it's paying a dividend yield of 3.3, and given the fact that under Trump, oil industry could actually rise yet again, it is very possible that ExxonMobil will see its stock price to actually rise over at least 2025, maybe even during the entire Trump presidency. There is a very good chance. Of course, there are other competitors, but when it comes to such an industry, when it comes like energy industry, it's not as easy as to take a look at the competitors, because if a new competitor comes into this industry, it's very difficult for them to break into this industry. We're talking about industries where you need like billions of dollars, hundreds of billions of dollars to build the entire infrastructure and take advantage out of it. You cannot do that overnight. That is why you're most likely going to take a look at most traditional companies such as Exxon. Now, I'm not a big fan. I don't think it's going to grow substantially. It's a very safe investment if you think about it, because Exxon is the leading oil company in the world, not just in the US, but literally all across the globe. But I mean, you're going to get a dividend of 3.3%. And if it actually happens, just like Trump says, it might actually see its stock price to boost yet again. Now, when I talk about energy, it's not about oil, it's also about renewable energy. Now, this might sound confusing because Trump is not a fan of renewable energy and he's all about oil companies. But you have to understand that this Trump presidency is going to be very different from the previous Trump presidency. On the board of this Trump presidency is somebody who is a huge fan of renewable energy, and his name is Elon Musk. He might not have an official position of being the Secretary of the State or the Secretary of something or whatever, but he is going to be, or he is already the closest ally of President Trump. And guess what? Elon Musk is a fan of renewable energy. He understands the sector. He built the most successful businesses in this industry, which is Tesla. Now, first of all, Tesla will certainly do a great job during Trump presidency. It's overvalued. I mean, if you take a look at its PE ratio, it's around almost 100. Of course, this is not the only thing or indicator you should take a look at, but it actually tells you a lot about the business. But at this point, I think nobody really knows for a fact what Tesla really is. Because on one side, Tesla is doing renewable energy, and they actually do that, and they're really good at that. On the other side, it's a car company, and they are doing really great at that. Yes, maybe the quality of their car is something debatable, but nonetheless, they are manufacturing their cars in the United States, and they have done a phenomenal job, whether you like it or not. On the other side, Tesla is an AI company. Now, that's something that a lot of people will debate, again, will negotiate, will say like, wait a second, since when Tesla is an AI company? But think about that for a moment. Now, when Tesla came out, the main promise behind Tesla was that self-driving cars. Now, self-driving car means artificial intelligence, and they've been training their AI for the last, I don't know how many years, probably since the inception of Tesla or since Elon Musk took over Tesla. So they can claim that. Now they can take that technology, their renewable energy, their AI, and turn it into a completely something different, right? And that is why they can also take advantage out of the boom in AI that happens. So even though that Tesla is an overvalued stock, given the fact of the circumstances that we have right now, where for the next year, I mean, if the relationship between these two guys is not going to be worsened over the next year, then I think Tesla is going to see its stock price to rise. But you can also take a look at different companies that are also in the renewable sector, such as Nextra Energy. It's one of the most successful companies when it comes to this sector. They do the renewable energy, they do solar, they do wind, they do all kind of renewable energies, and they have a market cap of $150 billion with a PE ratio of 2022. So this is one of the companies that you can actually dig into and take a look, but this is just one example. I don't think it's going to be the only company that will take advantage out of it, but certainly if you want to take advantage out of 2025, you certainly should take a look into renewable industry. Now, if you kind of take a look at the third sector that is going to boom next year is certainly semiconductors. Semiconductors are going to power AI, which means that they will make a lot of money. Now, NVIDIA is not going to exist without TSMC. So TSMC is going to certainly keep growing next year. And there is a very good reason. And that reason happened particularly in 2024. Now, so far, they still control 62% of the market, which means that they don't have a serious competition in this industry. And Apple and NVIDIA, both of these companies heavily rely or 100% rely on TSMC to manufacture their chips. So we know for a fact that the demand for TSMC products are going to be there whether you want it or not, which makes it one of the safest investments out there. Apple designs its chips, but it does not manufacture them. It outsources its manufacturing to a company like TSMC, and it outsources almost 100% of their manufacturing. The same thing with NVIDIA. So if you keep expecting NVIDIA to grow, then you can expect TSMC to grow as well. Now, I was actually skeptical to actually add this company because of the things that are happening in China. Now, China wants to take over Taiwan one way or another. We don't know how that is going to go, whether it's going to be a military thing or a financial thing or some kind of any other pressure in order to bring back Taiwan into the mainland China. But TSMC is being turned into an American company. Like the United States is forcing this company to shift their manufacturing to the US. And guess what? TSMC wins a $6.6 billion US subsidy for Arizona chip production. They're building 3 factories in Arizona and they're bringing their manufacturing back to the United States. Plus $5 billion in loans and a 25% tax credit. The United States is providing everything for TSMC to bring its manufacturing to the United States. So within 2025, it's no longer going to be like a Taiwanese company. Now, it's going to still manufacture a big portion of their chips in Taiwan, but the chips that they will supply to the US companies such as Nvidia and Apple, which are the largest consumers of TSMC, will be manufactured in the United States, which is why its stock price will continue to keep growing. Now, another company to pay attention to is certainly Samsung. Now, Samsung is in a position to compete with TSMC, and this as this industry keeps growing up, more companies will be interested. But Samsung simply have the experience to do that. Like, there aren't many companies that can do what TSMC has done, and Samsung has already showed its willingness to do that. Other companies investing in Samsung, helping it to become that competitor. Why? Because the more options out there, the lower the prices are going to be. And if you kind of pay attention, when I was actually getting ready and preparing this video, guess what happened? There is almost a coup d'etat that is happening in South Korea, which is plummeting its economy. And since Samsung is a South Korean company, guess what? Its stock is suffering, which makes it a very good buy at this time. Now, again, before making any financial decision, you should know what you're buying. You should analyze the company yourself. You should take a look at the numbers. You should take a look at the financial statements. Without all of that, you shouldn't be just randomly listening to people. You should know when you're actually throwing your money. That is how professional investors invest. Because if something actually happens, there are going to be a lot of volatility when you buy that stock. And the only way you can actually pass through that volatility without selling at the wrong time is by understanding the true value of that business. That is how a professional investor actually invests. And if you need help with that, you can check out the first link in the description. Thanks guys for watching, and I will see you in the next one.